There's 121 minutes to go before we have the major event at Jackson Hole. And this sideways price action is bound to end today with either volatility shooting to the upside or the doom candle to the downside. Let me know in the comments, which one do you think it's going to be? Is it going to be a God candle to the upside or a doom candle to the downside? Jerome Powell today holds the keys to all of our coins. They say not your keys, not your coins. But today he holds the keys, and it's going to be up to him what the market does. So let's see if the charts give us any sort of a clue into what may be coming. And I'm going to start off with Bitcoin on the high time frame chart over here on the weekly. And as long as we remain below the weekly close over there, yes, James.
I just changed the setting. I think you're on the right line.
Oh, just 1 second, guys. Let me just switch. One second, switching the audio. We believe the audio is bad. We just moved everything. Testing, 1, 2, 3. A little bit up. Okay, how's that, guys? Perfect. So sorry about that. As you know, we've had the crackling sound within the YouTube video, so we have been playing around with different browsers. So hopefully this is perfect. So as mentioned, we are stuck below the weekly close from the prior week, and that would mean that the ball is actually in the bears' courts for now. But to be honest with you, when it comes to events like these, nobody really knows. All we can do is have a look at it as from a probabilistic standpoint, and I can tell you that the probability still does remain to the downside. So you need to be looking out for a couple of key things when the speech does happen, and we will be broadcasting live, at least Rand will, in the next few hours, and we will guide you along the way with regards to what he may be saying and whether you should be going long or short. I have 3 trades currently open, and I'm going to give you all 3 of those before the end of this video. They are short-term time frame trades, so 2 of them are shorts, 1 of them is a long to hedge against that short. So looking at this tweet over here, the event that's taking place today is the PCE data, which is coming out. If it shows a peak in July and begins to trend lower from here, then we can expect a risk appetite to increase, which is going to be good for risk. And conversely, when the PCE does not trend lower, then the Fed will have reason to tighten, which is bad for risk. So with that being said, essentially what this PCE is, it's kind of gives the Fed an idea of how the market is doing, how they're spending. It just excludes some certain things like energy and determines a cost basis and the health of the economy based off of that. So here's your Forex Factory. Always pull this up. Have a look at any time that there are red outlines over here. That's going to be your important things. And then, of course, at 10 a.m. is when Fed Chair Powell speaks. And all that we can do is analyze and listen to his speech and whether he's going to be hawkish or dovish going into that. So the data sets that we can use in determining whether this is going to be a Fed pivot is, of course, our Fed funds indicator that we have over here. And I have posted this on Twitter before. If you search under my name for the Fed funds indicator, you should be able to find the ticket to put that up on your sheet. Usually would use this on a high time frame like a monthly, but I did zoom in on a weekly. You can see it is still trending up in this expanding megaphone pattern, and it has not yet started to come down. And I've mentioned many times before, for those of you who are long-term investors, your best bet is probably to wait for this to start to turn down and have a confirmed monthly close to the downside, something like that. That would be your signal that risk appetite is back on the table and it's time to go fully long. At that point, the Fed would have completely pivoted. When we zoom in on a weekly chart to take a look at this, you can see it is still trending entirely to the upside. And if you look at the ADX and DI over here, you can see that bulls are still in control. The bulls, the green one over here, is still ticking to the upside, which means that this is likely to have continuation. So with that being said, stock market, again, also very important. Stock markets will all be looking to the same thing over here. There was a nice reaction from the NASDAQ off of that line over there, which is our key horizontal. As long as bulls can hold above that, then who knows, maybe they can run this thing higher. S&P 500 futures over here. Let's see what that one's doing. All right, I missed it. There we go. Okay, so this one has deviated back below the main orange line. And as long as that remains below there, I would say risk remains to the downside at least for the S&P 500. VIX, our volatility index, you can expect that this is likely to expand. And this is one of the things that makes me slightly more bearish, because we do know that an expansion of the VIX to the upside will typically mean that the stock market will decrease. Your government bonds, so your yield curves, those are all still trending up. We got the 10-year, 30 years going up, 10-year still increasing as well. So we need to see how this reacts at key levels. Let's mark them out. Key horizontal level over here. Let's see how it reacts at this level. This is an important zone that I'm looking at as the 3.2% level. So Bitcoin on slightly lower time frames. I want to put this onto a 3-day. 3-day is still trending to the downside. So you can see that major support is going to be in this region over here. And I'm going to show you, I'm going to outline my exact plan to you guys and the way that I'm anticipating the market leading into today. I'll give you a if or scenario. So if it goes up, what do you do? If it goes down, what do you do? But at the moment, high time frame is still trending to the downside. It does look like it will move into this box over at least the next couple of weeks. And then, of course, the bullish scenario is that we hope that it bounces from this zone, because if it loses that, then there isn't that much support in between the 18 or below the $18,500 level. That means that you could potentially shoot all the way down into $11,000 to $12,000 region. So that is for Bitcoin. Super Guppy indicator, we were looking for a potential spike into this zone in the same way that we had over here. And this is kind of one of the what if scenarios. So the either or. If price does tend to spike up into this zone over here, bear in mind, this is still going to be a primary resistance level for Bitcoin. So you can essentially take your chart over there, and this is going to be your primary resistance zone. Was the main breakdown point that happened on the 19th of August. And any spike into the 22,500 to about the 23,000 level would be a straight short for me. It's still going to be a lower high. I'm talking again more to those of you who are looking to hold your positions over weeks to months. For the longer term investor, the swing trader, the person that is trading spot or low leverage trades, you'd be looking to build a short position into that zone because the trend is still down. So that's for Bitcoin. Quickly looking at Ethereum at the Super Guppy indicator over here. Still stuck below resistance. I did put this in yesterday's daily candle newsletter. 3 phases, right? We have contraction, first phase of expansion, contraction, second phase of expansion, contraction. Now we're waiting for the third phase. A breakdown of this support level on Ethereum would confirm that that is probably going to be your next expansion to the downside. And that can lead to those much lower prices, bottom of the bear market, generational dip buying opportunities, if you want to call it that. But as long as Ethereum is stuck below the main resistance level, this is the same as what I showed you on Bitcoin, call it related to Bitcoin's 22,500 level. That level for Ethereum is going to be around the $1,800 mark. Price needs to get above $1,800 and hold there. And if it can probably start to shoot through to the upside. It may actually start to then look like a good accumulation zone that happened around this area over here. But too soon to call. We can't say anything about that yet. With that being said, if you enjoy this video, please make sure that you give it a like, hit the bell notification, and subscribe. And if you are not yet signed up to any of the exchanges, you can use any one of these exchanges that will give you access into our Discord. Discord is where I have been dropping the trades live. So you would have been able to get into all the trades that I'm currently in had you done that. Consider using my OKX link over here. You do get up to $10,000 in sign-up rewards. So something very important with regards to the markets is looking at what is happening on the spot exchanges and spot flows. So obviously a bearish account. Look, just don't take it at face value. I'm just looking at the data over here, but he says, don't worry, spot is not buying Bitcoin. It will, and it won't somehow magically go up to reach the lines that you have drawn on your chart much higher up. Essentially what he's showing over here is the white line has been downtrending for many months now, and that is the spot buyers. There are no spot buyers in the market. When you look at the purple, any sort of expansion to the upside that we've had, or bullish momentum, has mostly been driven by perpetual contracts. So leverage traders, they're the ones that are using, of course, leverage to leverage up the market and push it to the upside. Spot buyers have not yet entered the market, which means that it's kind of artificial buying pressure that's been going on. That's what you can derive from this information over here. So I'm going to spend a bit of time on this chart. This is the most important one over here, and it is our daily chart. You really want to be focusing on the daily at the moment, because this is kind of your main trend. When you want to analyze markets, always try and trade in line with the trend, which is why the probability is still higher looking for shorts. But that doesn't mean that you don't have to take longs. As I mentioned, I have taken one long trade myself. I'm going to give it to you in just a second's time, 2 charts time. I'll be showing you what I'm looking at. So with this being said, we did have the bear flags, as we've covered multiple times before. We had the full breakdown. The measured move on this takes you all the way down to 12K. Now I have a little note section over here of some things we have to cover. So first and foremost, a little bit of astrology for you. We have the moon, the bear moon, that's going to be printing tomorrow. Today's important data, of course. We have the inflation data coming out soon. And then I wanted to look at a couple of moving averages over here. So the first ones that I wanted to put together that have worked very well historically is the 34 EMA with the 9 EMA. Now, if I go back, let's actually start further back over here. Let's go all the way to the top of the market, the top of this run over here. As you can see, when the 9 crossed below the 34, that kind of governed the trend all the way to the downside. Anytime that price pushed through, it oftentimes broke through the blue 9 EMA and pushed into the 34 EMA, which is the white one, and that continued to pressure price all the way to the downside. Then when you fast forward all the way down, so it took us all the way to 35K from this would have told you to completely exit the market at 60K. I'm sure many of you wish that you had this indicator back then. Let's say, well, the cross happened there and you would have sold into this one over here. So you would have got out at 58K. Brilliant. Amazing. So you got the meat of the move, right? Started shorting all the way down. Here it would have messed you around a little bit. So that was around February 2022. Would have kind of given you some false signals to get back in the market, choppy, which is what we've been experiencing, right? We've had a lot of chop over the last couple of months. In, out, in, out, in, out. And then you break down the bear flag over here, tells you to completely get out again at, let's say over there. So break down, push back into that zone, 41,687. You're now fully out the market. Comes back over here, you break down the next bear flag at 31,000, gets sent all the way down to our lows that we had at 17.5. Now you had that consolidative kind of movement over here where it chopped you in and out. So up, down, up, down, up, down, broke down the bear flag, crossed below. You see that? Now currently you have a bearish cross over here with the short-term moving average, just like it was all the way at 60K as well as at 42K. So cross down, blue below white, price stuck below both, price stuck below a key horizontal level. That means risk is still to the downside. You don't want to long into resistance, do you? I mean, you can if you want. I prefer not to. I think that the risk is better to, if there is going to be some sort of a pump, to short into that pump. Then you start to load up on your shorts within this liquidity zone over here, this green box. And then you target lower prices until it proves otherwise. You have a confirmed lower low here, as I've mentioned to you before. So that's the one thing that I wanted to point out over there. Let's grab our notes again. The other one that I wanted to point out to you was the 12 and 24 EMA. So let's turn those ones off. 12 and 24 EMA. Which one is it? Here we go. This one. This is one that a lot of people use, the 12 and 24. It's the yellow and the pink. Yellow is below pink. That's bad, right? So it gives a very, very similar picture. And this is on the daily chart. Same story over here. You would have been completely out the market around 60K. Told you to be out, chopped you around, got you out again. You still stayed out, exactly the same as the other one, chopped you around. And look, now we have the same thing. Price is starting to push up into those EMAs, coming into the resistance. It's the exact same story. This is telling you that risk remains to the downside. So you don't want to kind of bet just on an event hoping that it's going to work out for you and the whole market's going to rally. Let's say the event goes really well and the result is better than anticipated, then maybe it has a chance of having some sort of, as we call it, a guard candle to the upside like that, and it takes out all of these highs. Now, what will happen then, you don't need to panic. If you have something like that, if you have a straight up candle like this, that creates an imbalance in the market. And the reason why I say you don't need to panic is because price will often have a way eventually of reverting all the way back down to that. So maybe you have that kind of a candle, we shoot up, let's say we go straight to 27, 28K. We're still at resistance, right? In relation to this zone. That's still major resistance. Now, price will tend to move around a little bit. Then it will start to come down to fill that imbalance. And you can Google that. If you're a trader, go Google imbalances in the markets. You'll find that when you have these mega moves that leave a lot of people out, oftentimes it will come back and it will refill that imbalance. You just have to be patient, and that will still give you your entry to go long. So my point is that at the moment, there's too much risk to be building long positions just because of the hype of an event. And this is a very hyped event. It could even become a nothing burger, to be honest with you. The main thing that you want to be focusing on is when the CPI comes out, and I'll give you the date for that in just a second's time. But last thing I wanted to look at on this chart, so let's turn off those EMAs, is the volume profile. So you can see the volume has significantly, let's just move this up so it doesn't distract you. The volume has significantly been decreasing. I'm sure you can agree. So you had the major sell-off over here with that wick on the 12th of May. Big volume. You had the next major sell-off over here, which happened on the 18th of June. Big volume around that area. And ever since then, this whole consolidation messing us around has just been on declining volume. And that also stands true with what I showed you over here, that spot buys are not entering the market. That's why there's no volume, because I'm looking at this on Bitstamp, which is mostly where these big whales and things trade. This is a Bitstamp chart, and you can see that the volume has declined. And it almost works in a similar way to normal trading. You can almost draw like a trend line like that. And as it starts to near the end of that volume profile, there will be some sort of a major expansive move out of that area. Now, you want to be on the right side of that move, because if it is spot that starts to jump back in, well, you don't want to miss that move. You want to get back in, and I've given you exactly how that would work. If it does go to the upside, you know what to do. Be patient, wait for the imbalance to be refilled, and then you have a chance to get back into the market. Don't fret about missing 10% of a move. You want to catch the bulk of the move. And for all these guys that continue to think that each one of these was the bottom, I bet you this candle over here, many people thought that was the bottom. It looked like a capitulation candle. What that means, that, like, let's say you didn't buy the whole thing, you bought it 46K. How are you doing today? Trapped. Over here, it looked like a capitulation candle. That looked like a capitulation candle. This one over here, everybody also thought was the bottom. We haven't had it yet. I don't believe that we've had the major capitulation. So, touching on CPI very, very quickly, I just wanted to go through, I have a note over here. So essentially with the CPI, if the data is positive, then we're probably going to get a small pump, but it's going to go straight into resistance. However, if it is negative, then we're going to have a huge dump. And the dump, the ratio between the two is still probably, the dump is going to happen harder than what the pump would. I hope I'm not talking in riddles over here. I don't want to confuse you. I just mean that, let's say news is good. For example, we pump 20%. News is bad, we dump 50%. Big difference, right? That's essentially what I mean. So, okay, moving on from this chart, let's go on to the actual trades. But Bitcoin over here, on the 4-hour chart, very similar to what I just showed you on the daily. You have all the important EMAs, 2150, 200, all crossed down, each below each other. So low, below, mid, below, long, price stuck below all of those. Not really a good sign for bulls. Momentum oscillators are trending to the downside. So now for the trades. Here's the trades. I dropped them in the Discord group. I'm trying to drop 2 to 3 over there for you guys a day. Most of them will be dropped after this time. So because I'm usually busy until now. And yeah, around any time from now for the next few hours. So if you're in the US, it's going to be your mid-morning. So this is one chart. Gave the Matic trade over here. Entry was at 82 cents. Invalidation is all the way up at 83.2, so 83 cents, and targeting all the way down to the bottom of the range. I'll tighten my stops as we go into the event, but you can see a nice downtrend, right? So you have over here a series of lower highs, lower highs, lower highs, lower highs, and then you have your lower lows coming in over here. So I'll just kind of track this. I'll probably, whenever the next lower high gets set, let's say it goes up here, I'll probably put my stop above, especially if it's confirmed going into the event, at least book some profits there. Always move your stops into profit if you have the opportunity to do so. The other trade that I took is Chilliz, also going well, not too bad. I looked at this as a primary liquidity zone over here, started shorting from that level. So far, it's looking good. This thing has really pumped, so I'd imagine it's going to have the exact same reaction to the downside. I would be targeting all the way down to 18 cents. Big move to the downside. And then I have Bitcoin over here, kind of like a little bit of a hedge underwater, still building the position, defending mid-range. So let me try and make this a bit more clear for you. Essentially, I am viewing this as, I'll do it again for you. Let's do it again. Let's just grab the fib over here. So this zone over here, where all these wicks are, I'm viewing that essentially as the range high, like that. And then coming down towards these levels over here, where all these wicks are, this is essentially going to be the range low. So try get a few more touch points, and then here is your mid-range, and this is why my invalidation is around here. I'm hoping that mid-range will hold. I've given it a little bit of room, so around the 0.5 fib retracement level to work out that mid-range, and I want this level to hold. If not, I get stopped out. That's completely fine. It's hardly anything. Most of my entries have been in the red because I build my positions over time. So let me quickly see this. So let's say price comes down. It's going to be 0.69%. I'm not running mega leverage because I do expect high volatility coming into this. So I'm running 3x leverage on all of my trades. And I think that's actually even a lot when you consider things like Matic and how fast they can run, especially Chilliz over here. I want to give you a high time frame analysis on Chilliz. Let's just zoom out. So why did I go short on this? Quickly give you my thinking, move it on to daily. Very simple. Well, it had run hard. Yesterday, when I saw that the daily candle over here took out the previous day's low, that was my signal to go short. And pretty much my invalidation is above the previous day's high. If this candle starts to come back up, take out that previous day's high, then I know I'm wrong. Fine. Hardly lose anything, because remember, I always build my positions bigger as I get closer to the invalidation. And what I mean by that is this. Let's quickly grab this. So let's say usually I'll enter like maybe just 10% over here, and then I'll keep going in 10% increments, 10%, 10%. Halfway through my red zone, I'm usually about 50% entered, and then I reserve the final 50% for right there, as close to invalidation as possible. And I'll sometimes even go up higher on leverage, like maybe a 10x leverage, because let's just grab this. Because if I'm wrong, let's grab the ruler. If I'm wrong and this goes against me from this zone over here, I get stopped out very quick. I lose 5%. So that's a 0.5% move with 10x leverage. I'm losing like 5%. It's worth the risk if you know that's exactly where you're going to be wrong. So guys, that's it from me. Tune in later with Rand Show, because that's going to give us live up-to-date information based on what goes on with that Fed meeting, and we'll talk you through it. Make sure that you like the video. Make sure that you sign up using the OKX account if you do want to gain access into that VIP section on Discord. Oh, just to make it crystal clear, the VIP section is entirely free, by the way. All you need to do is sign up using the OKX link. You can make a small deposit, whatever amount, it doesn't matter. Then you use that user identity code. That will give you access. It will show you, type in your code, and they'll verify you within 24 hours. And that's it from me, guys. Until next time, I'll see you guys all on the next video. Let's hold thumbs. I hope that the market has bottomed, although I don't think so. But I hope that the news is taken well and that we can continue bullish. Life is just better when it's a bullish market. See you all in the next one. Cheers for now.